Hi friends, welcome to another edition of Matrix Moments. I have great pleasure in inviting Amrish Rao and Jitendra Gupta to this edition. I'm going to give everyone on this podcast a quick introduction, but I'd love to really hear from you guys the story of how you met and jab we met and all of that. Amrish is a Bombay boy, engineer, ended up spending 8 years at NCR, another 9 years at First Data, and Jiten, Jaipur boy, moved to Mumbai, ended up at ICICI for 8 or 9 years. And I think the way these two guys met was actually a transaction. I think Jiten was trying to sell the ICICI business to Amrish. So maybe take it from there, how you guys met and how you decided to work together.
Sure, so I can take a step because I think I still have very clear memory of what my first impression was about Amrish. So, so frankly, when I met Amrish first time, I was like, this is the most arrogant guy in the world, which I can't work with ever.
Things haven't changed much.
And so that was the feeling I had, and I think that feeling lasted for at least 6 months. So literally, when I was running the transaction, we had like 4 or 5 bidders, and Amrish, representing First Data, was one of the bidders, and I'm like, come what may, I'm not gonna deal with this guy. So, but in the end, after I think more you know about Amrish and the more you hang out with him, you sort of realize it's just his appearance, his arrogance, but below it, he's like very humble, very knowledgeable for that matter. And I must say, one of the best guys to have friends with for all work, fun, everything.
So
Thanks, Jiten. Thanks, Jiten. By the way, thanks, Vikram, for the introduction.
So the context for all the listeners is that Jiten was at ICICI and they had the acquiring business, which is the terminal acquiring business. And First Data was interested in acquiring the business, and Amrish was the CEO of First Data at that
Yeah,
time.
yeah. This was the height of the financial crisis. This was in about 2009. Went to ICICI Bank, met up with Jiten and his colleagues and tried to convince them that First Data is a great place. And you know how ICICI Bank and some of these big banks are, right? They know it all. They had all the knowledge of the whole world. So you really had to, in a very subtle way, try and explain to them, saying that, guys, what you have done and built is fantastic. But if you bring in a strategic partner, we could take it to great strengths. And really, that's what we did. I met Jiten, who incidentally is a Marwadi, right? And I've got to tell you this, that I learned, and that was my starting process. Marwadis are the worst negotiators. And the part which is really terrible about them is they never stop negotiating. You have negotiators that you have 1, 2 conversation, negotiations, and you shake hands and go away. With a Marwadi, it's forever. It just goes on. Like I am negotiating with Jiten on every damn thing for the last 7 years that I have known him, 8 years I've known him. We've had situations in this ICICI Bank transaction where we walked out of the meeting saying, I'm never going to deal with you. I just don't want to deal with you anymore. I'm done. First Data is walking out. We don't want to do anything. Anyhow, he came back to the table. But more so, I think in my life journey, I think Jiten will have played one of the most pivotal roles there. So I'm really thankful for having borne through the pain and come out on the other side.
That's a fantastic story. Part two of the story is that Jiten wanted to go to B school, I think in CID or something,
NCR, yeah.
and you ran into him in the corridors of ICICI or First Data.
No, this was at a
Advent,
party by one of the big PE firms, and this was purely a wine and meet friends kind of a party. The deal had already happened, and I knew Jiten really well,
And
and
I
we
had
were,
left ICICI actually.
yeah, about a year later, I just bumped into him and saying, "What's up?" And he's saying, "I've left ICICI Bank. I'm actually going to INSEAD." And I was like, "Wait, wait, wait, wait. How old are you, by the way? Do you have kids? What does your wife do?" And then the question was, "Why INSEAD, man? Don't think about INSEAD. There's lots to be done on payment side." And then the whole conversation started out there. Well, he could have gone on to INSEAD, become the CEO of, PayPal by now. Who knows?
And for all listeners who don't know what Jiten looks like, he looks a lot older than actually he is.
Yeah, that's a very conscious choice actually. Just to sound more wiser.
Yeah. So, and that led to, the founding idea around Citrus. How did that come about?
So, so I can say, so Amrish, so in that meeting, basically Amrish did enough sort of to convince ki, why don't you start rather? And I think that's a better idea rather than wasting your 1 year
I have
and
to cut
15
in
months.
here and I have to tell you the deal. Okay. So the deal was we had this was 2011, 2012, and
2010 end.
yeah, 2011, and there was just no world of VCs, and we really didn't know who's what and all of those things. Jiten's only reaction on that one was, "I've got a wife and I actually have a mortgage to pay for." So I said, "Done. You know what? I will actually give you the money for that to work here." So if you think about it, in terms of angel investment, my angel investment was to pay off Jiten's mortgage and to for him to actually take his wife out for the full month. So literally that was the only thing what Jiten like saying, okay, we can do it, but I'll tell you what, somebody's got to fund so and so things for me, right?
Yeah.
And that I thought was
Just,
the
I'm just wondering, usually when I ask for a business plan, I say fixed cost, variable cost. Yours was fixed cost is mortgage, variable
That's
cost is
it.
taking out your wife.
exactly
Right.
that's exactly right.
So yeah, so it's an interesting one. So so he actually, I must say, in the second meeting, he said, "Done, agreed. Let's just move on." And I don't know what happened to me. I just took a leap of faith, and I'm like, "We'll see. I'm in this B school. I can go next year if things don't work out." And frankly, I had kept that as a plan B. So, but as the time would have it, things worked out.
But Vikram, I just want to tell you about this, right? Today, I think there's a lot of people, who overthink the situation. In reality, what it is about what do you need to take the jump. Now, Jiten was brave enough to say, "I'm not going to go to INSEAD. I'm going to take the jump. I'm going to move forward." I, on the other hand, was really the safe guy who really didn't feel comfortable saying I believed in it. I had my ownership in this company, but I did not believe that I can give up my great salary, great job, and go into this on day one. But we had this clear comfort which says that what, let the business take off, we'll get some revenues into the game, we'll get some funding, then we'll be able to fund two salaries suddenly, let's get going. I think in this whole, the VC movement that we are seeing in India, I think a lot more founders should think about it in this fashion, which is saying that what does it really take to run the company for the first 6 months, the next 12 months, and the next 18 months. And if you break it down in that fashion, I think a lot more startups could really come out there. Massive credit to him. His ask was really as I
Yeah.
said, and he said, "I'm taking the jump. I'm going forward with this."
Yeah. And with the founders today, I often talk about the opportunity cost of not starting up.
That's
And I
it.
think, and for you, the opportunity cost of not starting up at the point that you were was just too high.
Yeah, so yeah, so just giving up the whole 1 year B school and this, and of course the whole thing in terms of how like the payments opportunities right now. If we don't get into the bandwagon now, maybe we miss it after 2 years. So that thought was very clear. So that really worked out, I would say.
Fast forward, what, 2, 3 years, and you get Amrish on board full time. Talk about the thought process at that point in time to say going to bring on this heavyweight, quote unquote,
The fat salary guy.
fat cat salary guy, and you were MD, he was MD. How did all of that thinking evolve?
So before we get to the business side of it, I would love to talk something which I find it as one of my favorite topics here. So I was personally about 37, 38 years of age, and I feel that there is this new concept of a midlife crisis. And unlike the old midlife crisis of motorcycles and having an extramarital affairs and so on and so forth, the new midlife crisis is doing a startup here. So I was going through the classic midlife crisis where I wanted to do a startup, wanted to do something new, and I just wanted to get on with my life here. So the sooner I get off this whole corporate treadmill, the better. I think we just reached a point where we felt that we had enough in the bank for to have both of us there and fund the company and go on further. So from my point of view, that was really the right time to look at it.
Yeah, I think clearly Before I answer your question specifically, I think the one thing which I still feel which worked out in our favor was so our first funding was 1.75 or 1.8 million dollar. You'll be shocked that lasted us for 2.5 years. So now for a startup today which raises 1.8 million dollar, I think in 6 months the startup is again in the market to raise 10 million dollar, right? So I think that really taught us that how to be more frugal, and if things are taking time in sort of taking up shape, how do you make things work with the small funding before you invest more? And I think that was the thinking when like our business was really struggling in first 12 to 18 months, to be honest with you. And I don't think we had any clarity in terms of whether this business will make it big. But when the whole e-commerce wave started coming in the country way back in 2013, this is when we started seeing the business taking a shape and we scaling up much faster. And with that scale, what I realized is that I don't think I could have pulled it alone in terms of building the right team. I did not have operating payments experience. What the experience I had was just the deal on the payment side, all said and done, which is like a strategy job, right? So I was like, I definitely need a person who can shoulder me on the operating payment side, who I can blindly trust. And I think this is where we discussed that, man, this is the time to quit your fat job. Why don't we work together and make this thing bigger? And I think that was sort of he finally got convinced after about 2.5 years. Yes, we have enough funding now to sort of make it really big, and that's when the decision worked out.
That's honestly, it's an amazing story of sort of how a company got started. And even though you guys keep taking jibes with each other, I know the fantastic chemistry that you guys enjoyed has what's kept that company going through multiple ups and downs.
Right.
Fast forward a few years, and there is this big acquisition offer on the table. And in this overall environment, where selling is equal to selling out, you guys took a very mature decision, which was we need to provide an exit. We're going to take this exit, and there is a window in which you can take on that exit. What were the conversations you guys had, and how did you say, okay, this is the right time, and this is the right thing for us?
So maybe each of us has a different perspective. You want to take a first shot? I can.
No,
give
you
my
should
view.
go first.
Okay.
Because I know I'm going to be different.
So frankly, I had a very different thought in terms of how I saw this whole selling experience or out the journey. I mean, one, I always felt that I had obligation to return money to investors. So I never thought that this is equity and if things work out it's fine, things don't work out it's fine. I felt that I can't sleep peacefully if the money I've taken I can't return it. So I think that was always on top of my mind. And in Indian ecosystem you get very few opportunities to provide liquidity. So I, being an investment banker as my last job in ICICI, I had seen that the deals are generally not easy to consummate. So I was clearly seeing that. Second, I think I did some math in terms of, and we took a very conservative base case in terms of if the company grows 3 years, 5 years by this pace, and what IRR our investor will make versus the IRR they make today and versus the money we make today, our dilution and all of that. And it sort of worked out that if I do a risk reward, maybe this is the right time to do that. Third, I think it was a difficult decision all said and done, because you, at the end of the day, there is a company which you started from your dining, so you get emotional about it. You are like, do you want to sell it? And the whole control thing, do you want to give away the control? Do you want to work as an employee now after being a founder? So I think those are tough decisions. And I think in the end, everybody felt that maybe this is the right decision. I think given a choice now, maybe I would rethink, frankly. So that's how I feel about it.
So, you asked two parts to the question. The other thing is we've also then stayed for almost now 2.5 years with the buyer, which is Naspers FinTech. At least in my mind, it was very clear, right? I've got a daughter and I've got a son. And what I don't want to do is 20 years from today, when my daughter and son actually look up Citrus and look up Nasper's fintech deal, what I don't want them to read is saying that deal did not go off well or that deal just disappeared. I take a lot of pride in terms of how my kids will actually view me 20, 25 years from today. And it was very important that once you sell the company, the deal or the transaction has to look really, really good for the buyer. So that was extremely clear even before we sold the company. We've actually worked very hard over the last 2.5 years to make this a transaction where the transaction has delivered results even better than the acquisition model which was put up together. Very rarely does that happen. But I think we knew this even before we sold the company. About selling the company, I'm fairly clear that I absolutely regret that decision. I'm fairly clear about it. And I think the big learning which I've got.
Thank you for that candor.
I'm very, very clear about it. I think the big learning which I've got is what you can create and what you can build on top of an existing platform. It is immense, and it is just unimaginable in terms of what you can build in fintech in today's time, as long as you have a platform there. And here we are, who have actually sold the platform that we had. So I just feel that would, if I was to go back in time on that decision, I would surely make a decision completely different. The second thing, which will sound very, very arrogant, but as Jiten says, that is what I do many times. You will soon realize that money never matters. Money does not matter. So for all the fact that we had a great transaction and an all cash deal, really didn't change anything in our lives there. Our lives have remained as same as it used to be. And there's one thing that we miss is the platform to create a massive, massive infrastructure on that platform. Other interesting fact around money. So today now, with the exit and the money that we've got out of it, what do we do with it? We go ahead and invest into nice instruments which can potentially give us certain sets of returns. And in that, what do? We go and invest into fintech companies. So wait, you took money out of a fintech which you actually owned and controlled to go and put money into other fintechs which you actually don't own and don't control. How smart is that? Yeah. So I think it's fairly clear in my head that if I go back in time, I would have taken a completely different decision.
Yeah, it's also fairly clear that you guys are entrepreneurs and operators, and that's what you enjoy the most.
Yeah.
I'm going to come back to your point on sort of payments companies and what is hidden inside all of the payments companies. But I think there are three important lessons that I picked up from that sort of story. The first was treating an obligation to give investors an exit. Right. And we've often found fantastic partnerships with those founders who actually feel that way. And we find it much easier to tell those founders to actually go for it, yeah, because we know that they feel this obligation. The second is what you said on exit windows, and I couldn't agree more. And which is why when exit windows come in companies, correct, I always urge founders to think in those exit windows, because you don't know when it will come again, especially in India, whether it's 18 months, 24 months. So that's the second one on exit windows. And the third, I love what you said on deal success, which is actually selling the company is not the end of the journey. It's actually the beginning of that last leg of making sure that this is actually a success, yeah, and a point of success even for the buyer. And I don't think people are, enough founders are thinking about it in that manner. Thank you. So payments companies, and I've been fortunate enough to invest in two and be on the board of two, and not fortunate.
Two great companies. We both are absolute fans of, yeah, both the companies. That
and not fortunate enough to invest in you guys, and you'll all forever be in my anti-portfolio. But when I look at the payments landscape, usage has gone through the roof. Payments is truly a pull product now, not a push product. And we all started in a market where digital payments was a push product. And it's become very hard to make money, and it looks like all the big boys in the world are also going to enter this market, and it's going to become even harder to make money. But we're all equally excited or even more excited about payments. So talk about some of that. What is hidden in the payments data that gives you confidence that these can become very large platforms?
So I think from my perspective, how I look at payments companies is more of an infrastructure companies rather than just a one business line, because it sort of truly provides the infrastructure to, it's kind of a railroads for any digital transaction. And in that sense, while from payments you may be making marginal or nil revenue, but what you get at the end is a relationship with the consumer, the relationship on the other side of the payment transaction, which could be the merchant or the other consumer, and data, of course. So, and today, if you look at it, the payments data is a real proof of what a consumer is doing in the digital world, or what a consumer is actually buying. And so just to give a simple example, so like in last 2.5 years we created this product Lazy Pay, which is a pay later product. And frankly, 2.5 years back, when we said that the payments data can be leveraged to underwrite the transaction digitally, nobody believed this could be done. And everybody was like, this is all story, and maybe it will happen. Who pays in India the money back without hitting to the credit bureau, or if you don't report the data to credit bureau? But we did prove that with the payment transaction behavior, you can actually underwrite the consumer, you can actually underwrite the transaction, and you can actually recover the money as well. So I think that's the first step, the credit. If you look at it today, anyone in the payments, they say, how will you monetize? I say, I monetize through lending. So we actually proven that we are able to monetize it through lending. We are just not talking that way. The second is, I think the lending, one is on the consumer side, the second is on the SME side. And you know that couple of your portfolio companies have started doing monetizing on that front, and that's a very, very underserved market, if you see. Third, today, like everyone is saying, once you got a relationship with the consumer, once you got a relationship with the merchant, you can pretty much move into the banking. Effectively, what is banking all about? I mean, the banking is all about your deposits, your payments, your lending, your investments. And I think payments and lending, if you're able to address, convincing the consumer to trust your brand and create a deposit angle and a investment advisory angle is relatively possible. So that's how I see it.
So before Amrish gives his views, so two questions. Well, now there is this a lot of noise about both neobanks and neocards. And with neobanks, India is going to leapfrog retail-led branch banking. And with neocards, there are going to be no cards in India, and it's all going to be mobile-led cards. And I know both of you guys have even made sort of investments in some of these spaces. How do you think about that, and how payments companies will fit into this entire landscape?
So you got to be very careful with the larger landscape of neo banking and neo cards there. So, for example, from where we sit, we think that retail consumers in the banking space actually have a pretty good product in their hand. So, when you look at a Kotak banking app or a HDFC banking or even ICICI Bank app, those apps are looking really, really good, and how they service to the consumer is not bad. When you look at some of the other markets, like when you look into UK and EU, those markets have pretty tough rules and the apps are not good enough. Hence, neo banking, which comes in with fantastic retail banking apps with a differentiated offering, can disrupt that market. To India, to disrupt that market, you need something really, really special angle to go ahead and disrupt neo banking. For example, we invested into this company called Open. Now, in that company, they are not disrupting the retail banking area. They are trying to disrupt the SME banking space. Now, we think there is a real opportunity out there because no Indian bank has really tried to come up with an app or a differentiated solutions for SMEs in India. That's a space that this organization is going after. We think that's a really, really good idea. Another area is even in retail banking, if you have a differentiated offer for a certain segment, so let's say for college going students or just out of college or early into the job, we think that could work. But if you're trying to come up with a neo banking product for somebody between the age of 25 to 65, I just think that it's a crowded market. There is no pain in the market. We don't see what can be done. Same goes in the neo card space, right? In neo card space, our thinking on that one is, if you come in with a card which is going after a niche segment, in India, the market opportunity is massive. But if you're just going to come up with a new card which is going to try and be a hook for your existing consumer base, we really don't see the value around it. Very interestingly, what you would see is around the world, food delivery companies, or for that matter, even in e-commerce, they haven't done a good job in adding on a fintech business on the side. So Amazon Pay never really took off. Apple Pay, after almost 6 years of trying, is just taking off. But around the world, this whole concept of I have a taxi service and I will come up with a payment business around it, has they found it extremely difficult to get it off the ground. So going into even neocards, going into certain segment niches and coming up with a value proposition for that, I think is very, very workable in India. But just a blanket product, we just think it's quite difficult to make it successful.
Two questions. One is neobanks. Do you see a world view in which both SMEs as well as some sets of consumers who are underserved today never actually go into a bank branch or never have seen?
Absolutely.
How far out is that?
I think the time is now, if you ask me, because I don't remember when I visited my branch last. So clearly the through mobile, I'm able to do every banking service what I want to, and in fact there are few services which I can't, which I feel can be easily ported to mobile. So I think that problem can be solved now. So I have a slight different view than Amrish on that. Whether for the consumer the opportunity exists or not. I think, well, yes, you need to take a segment approach, but I feel the opportunity is a big enough opportunity even today, while the existing banks are doing good jobs. I feel the how you start the hook is the key, and the second, how do you distribute the product is the key. So I think if I take a simple thing like credit card in India, I mean there are like hardly 35 million credit cards for a population of 1.3 billion. Forget 1 billion population, but 300 million population can be given credit cards. So I think that could be a hook to go.
Vikram, another thing which is very interesting right now is most banks in India have been built on the core base of deposits. Having a savings account is the core of what a bank has been built on. I really think that in the next 5 years, you're going to see a bank which is going to be built on the core platform of UPI. So instead of savings bank becoming your platform on which you build your bank, it's all on UPI, and around UPI, how can you do banking? It's just a completely different way to look at the whole banking environment. And again, in what we do, I think I spend many hours in a day just trying to figure out what could a UPI first bank look like. And there could be an opportunity out there in the market.
Yeah. So I couldn't agree with you guys more. I think the core is that suddenly you have this high frequency of transactions,
Right.
and you can actually build a banking experience on that high frequency of transaction.
Correct.
It could be SME invoices, it could be credit card transactions.
Right.
It doesn't have to be the old savings type relationship.
Exactly.
And that's a theme for us for sure. And I think I agree with Amrish there, where he said the Indian banks are more fintech than we give them credit for. And so if you're a fintech in India, you have to be very focused on how you can deliver a 10x experience over the Indian bank, which is not as easy as more sleepy banks
Yeah.
in other markets. So last question, you guys have made a bunch of angel investments and very successful angel investors, and you're compounding Amrish's problem that I have more money, so I have to invest more, and he has all these rich people problems. So what do you guys look for when you're making these angel investments, both in terms of founders, markets, and I know you've been pretty diverse in terms of your bets.
So I think from at least from my perspective, I clearly bet on the team because frankly, the what we have often seen, and there are in fact quite a few portfolio companies of ours where founders started with some idea, didn't work out, but the teams were so good that they hustled around and then they sort of immediately pivoted and then they made it big. Even like if you look at Bank Open, initially they were sort of trying to figure out the go-to-market strategy in a very right manner, but they figured out very soon within 6 months that how a bank partnerships can boost their business from a distribution standpoint, and clearly they did that. And I mean, so So clearly the team is very, very critical for us, and fintech is like a obvious area where there's so many things which the scope of the market is so big that there are so many things which can be delivered by improved experience, addressing a segment of population. So clearly, at least that's what I personally like.
So before Amrish goes, I must tell everyone listening that these guys have something which is the Midas touch, and we really like having them as co-investors. So Jiten actually invested with us, co-invested actually in the Series A of a company, and somehow that company ended up at an exit in like 18 months. So I will encourage everyone to have these guys on as sort of co-investors. Sorry, Amrish.
So, Vikram, I'm always looking for a game. So, for example, when I'm sitting on a Monday morning, I'm looking for on the next Saturday, Sunday, which cricket game I'm going to get. Tomorrow evening, who am I going to play tennis with? Actually goes into how I look at my angel investing also. So if I have a team where I feel that I'm just going to enjoy the journey in terms of what I will learn with them and what I can actually share with them, being a part of that team, that is what I really look for. Incidentally, we haven't actually invested in any banker who wants to solve for a fintech problem. We've incidentally invested into amazing guys who have the energy which is making us feel that we are part of a sport, we are part of a game, we are part of a team, we are trying to do something different. We've gone ahead and invariably invested into them, and I think that's what's been the philosophy. One of these days this will all become serious in terms of what we do, and then it's all downhill from there.
That's fantastic. Finally, learnings for fintech founders on two things. One is sort of regulatory compliance, because that's the one thing that I hear most fintech guys complaining about. And the second is dealing with banks, which also you can't get away from if you're a fintech.
So I want to make 2 points on this one, right? First point is, as a fintech operator, please don't think that bankers are idiots. Bankers are not idiots. They've been around for too long. There might be areas in which they see regulation and read regulation differently than the way you read it. They see markets and pains of a market or opportunities in a market differently than the way you see it, but they are not idiots. In fintech, you can build a very good company by working closely with bankers, with the regulator, and then finding ways in terms of how you go really close to the transaction. In the value chain, you can be close to the transaction or you can be further away from the transaction. The closer you get to the transaction, the more of the economic value that you can store with yourself. So get closer to the transaction. That's one thing which I would want to tell every fintech guy. The second thing is, however, if you come up with an idea which can completely disrupt the way the banking is done, you can create a great company. So you can create a good company by being close to bankers, but you can create a great company by disrupting. Let me give you one example, right? What UPI has built in India does not require a government supported body like NPCI to have created. I think all of us in the fintech space could have very easily created a UPI. I just think that we did not dream that big to try and create something like UPI. Even when we dreamt like a wallet, which is good but not good enough, which is not great. But UPI is great. And I think a fintech which can disrupt at the level of UPI, which I thought the market opportunity was available for almost 3 years before UPI came in, it would have been a multi-billion dollar fintech company which would have got created. So you need to decide, good is not all that bad, right? If you can create a good fintech company, you can have a great outcome out of it. But if you completely go ahead and disrupt the way fintech is operating, then you are creating something which is just unimaginable.
I think slight divergent view, but I think if you are in fintech in India, you got to work with banks. You don't have a choice. So even if it was, let's say, UPI, you sort of got to make every bank convinced to your idea and tell them that yes, you will be disintermediated on the front end side. So which I think for an independent guy to say that I will screw all banks while I'll create the intermediate layer, I don't think it was possible if a fintech founder was saying so. So clearly you have to work closely with banks, but at the same time, I think how do you explain them the value prop that you're not screwing them, you're working with them, you're trying to make the process simpler, you're trying to make the experience simpler for the consumer is the key. The second thing for any fintech founder is how do you build a resilience in your business, and that resilience can be built. So let me give a simple example. So everybody knows that in September, October 2018, this whole lending crisis happened, liquidity crisis happened, right? Now, and I know that at least 20, 25 fintech founders came to me, oh, what do we do now? And we are struggling and NBFCs are not lending to us and all that. I think in my view, if you're running a lending business, you got to have an NBFC. And if you're not thinking through that, what can screw your business, I think that means
Yeah.
you're not thinking enough. So if you had your own NBFC, maybe you could have done something better. You could have avoided the crisis compared to what you went through. So I think from a regulatory standpoint, clearly you need to think through what could be the worst case and how do I navigate the worst case and prepare yourself.
I just want to have a last line on this. See,
He wants the last word.
because Jiten is elder to me, he is a little bit conservative in his approach.
Oh,
so
yeah.
let's give it to him.
Great, thank you.
Just for the record, Jitin is the youngest amongst the three of us.
Thank you, Vikram. Thank you, Vikram.
So, but I love those 3 points that you guys made, and I always tell fintech founders that if you're in the fintech space in India, you have to manage these 3 things: regulation and compliance. Something will come up in your business. Banks, you have to figure out how to work with them, and crisis. It is coming around the corner. And if you don't want to manage these 3 things, don't start up in
Don't start a fintech.
don't start up
business,
in fintech. Guys, you guys know that I can keep talking to you guys forever. Thank you so much for the time. Truly appreciate it. And for all the founders listening on the call, Amrish and Jiten are usually a call away for any fintech founder, and now any non-fintech founder as well. Thanks
Yeah.
again.
Thanks.
Thank you,
Vikram.
Vikram. Thank you.
Thank you for listening, and you can find the transcribed version of this podcast on matrixpartners.in. You can also follow us on Twitter and LinkedIn for more updates.